All right, so it doesn't take too long of a cursory look at gold and silver graphs to see that over the course of the last few months, we've been seeing some weakness here within both assets. And pretty much around the June time, we start to see it really develop. And I've been banging the drum pretty much nonstop about the association with Delta pretty much being an issue over the course of the last few months and how that's been providing a lot of weakness here that we've been seeing in gold and silver prices. Now, in the same token, I've also said that I expect gold and silver prices to actually soar and go back up to where the trajectory that it was going back to once we start to see the economy really recover. But the main driver behind this recovery will be Delta cases coming down. Now, over the course of the last couple of days, you've probably been seeing graphs. If you've been typing in, Delta virus or whatever into Google, you've probably been seeing graphs begin to come down a bit in the United States. Hasn't been such a huge and quick drop, but we've been seeing some slowness and actually some drops there in cases, which is good. Now, here's the thing. We are in September and October, and it doesn't take too long of a cursory glance as well to see a lot of people talking about, is there going to be a market crash? Obviously you have people, you got Ricky Gutierrez here, you got Robert Kiyosaki, go on and on and on, Michael Burry, Jim Cramer, everyone basically has market crash on the mind. And for myself, I don't think that there's going to be any sustained or, really terrible drops within the stock market or financial markets for too long. I do think there's going to be weakness ahead. I don't really see, too much near-term positivity. However, I do think that the bond market is already looking ahead as to positivity to come. Now, you may say, well, how do you know this? Well, this is the graph that I like to look at the most, and this is the 10-2 yield curve. And long and short of it, I talk about this a lot, but the 10-year is essentially rising, and it rose pretty aggressively over the course of the last couple of days post the Fed announcement about a soon-to-be tapering, and them also admitting that inflation will likely last longer than we initially planned for. Obviously, if you've been watching this channel, you know that I've been calling BS on that for the last couple of months, and it looks like they're finally owning up to it, even though they're not really saying, hey, we got it wrong. I think they're basically saying, all right, you guys caught our hand in the cookie jar, and I guess we got to start, being a little bit truthful here. But anyway, the 10-2 yield curve is essentially looked at by economists as a leading indicator for whether or not we're seeing a potential for a recession, the potential for the economy recovering and expanding. And essentially, we'd been going in the opposite direction over the course of the last few months. And it hasn't really been until recently that we've been seeing some upward momentum. And really, that kind of got kickstarted by this down here. And towards the end of July, we hit a dip. And we didn't really rise too aggressively, but we've been pretty much rising consistently with the 10-2. We're pretty much trending up positively. And really over on Friday, we actually hit a near time high of 1.18 in the spread between the 10-2. That is actually even higher than one of the latest high points, which was on July 13th of 1.16. So it hasn't been since July 13th since we've seen the 10-2 get above 1.16. Actually, I should even go back. When's the last time we were above 1.18? I guess you could say that the last time we were higher than that was on July 2nd, which is pretty interesting if you think about it, because that's right around the time we really saw a dip in a lot of economic activity. But here's the thing. What does this mean moving ahead? Well, it means that the bond market is looking ahead and saying, well, hey, it looks like we might be expecting a bit more positivity in the future than negativity as far as expansion is concerned. So here's the thing to take note of. When this happens on the 10-2, that essentially means that gold and silver prices will start, and I will also even say commodities, and you've probably been seeing this in oil actually. We should expect to see higher prices because inflation expectations usually follow suit right lockstep with an expectation of expansion within the 10-2. They call it the steepening of the yield curve. So you have a lot of, you could say FUD or bearishness or negativity currently within the markets. And, looking at coincident factors, I can say, yeah, things aren't looking good right now. But if we're looking ahead in the future, it looks like the bond market is pricing in some positivity within the markets. Now, does that mean that things are going to be positive for consumers? Well, if you're expecting inflation, you go down to your local food store or whatever, that's not necessarily going to be a good thing. But for people who own assets, this will be a good thing. So as we do here on this channel, many of us own gold and silver, expect prices to rise. And also for those of you who own Bitcoin, as we've said many times on this channel before, Bitcoin and gold have a positive and moderate correlation. So also expect Bitcoin prices to rise as well, relative to where it is. I don't know if this whole China thing is really going to drop the price down aggressively, but I do expect it to rise once we really start to see inflation expectations really start setting in. Now, remember, guys, Delta cases are coming down. So there is a fundamental argument here as to why we're also seeing the bond market react this way as well. And also to the degree in which it's reacting. It hasn't been a completely straight shot up. It's kind of like a tepid rise here, just like how we've been seeing a tepid decrease in Delta cases in the United States. So basically, it looks like we're trying to find direction, but, and it's a big but, something could still happen within the next couple of months that may see it trail off or may see it continue to go down. But as of right now, it looks like the bond market is pricing in a potential for an economic expansion as it's moving slowly up. So guys, let me know what you think about all this in the comment section.